Good morning, and welcome to TOITOI Japan Market Radio for Sunday, April 12, 2026. I'm your host coming to you from Tokyo. This is our daily briefing designed for global investors tracking Japanese equities, currency, and rates. Today we're covering what's been a particularly notable week for Japan markets, despite today's holiday closure.
Thanks for having me. So the Japanese market was closed today for a public holiday, but the context heading into this weekend is quite strong. We've just wrapped up what appears to be the best weekly performance for the Nikkei 225 since 2024, which is significant for investors who've been monitoring Japan's equity market over the past year.
That's a strong setup. Let's dive into the details behind that rally. We saw reports that markets rose over 1% on buying in blue-chip banking counters in the most recent session before the holiday. What's your read on that move?
The strength in banking stocks is particularly noteworthy here. Blue-chip financials saw concentrated buying interest that lifted the broader indices over 1%. Bank stocks are effectively a barometer for Japan's economic health and investor confidence in the financial sector. When you see this kind of demand for major banking names, it typically signals improved risk appetite and growing confidence in domestic lending conditions.
And banking stocks carry substantial weight in both the Nikkei 225 and TOPIX, correct?
Exactly. The banking sector represents a meaningful portion of both indices, so moves in these names have outsized impact on overall market performance. What we're seeing here suggests investors are more confident about credit conditions, bank profitability, and the broader economic backdrop. It's a shift from some of the credit concerns that may have weighed on equities earlier this year.
From a positioning perspective, how should global investors think about the implications for Japanese equities going forward?
The momentum is clearly positive in the near term. The over 1% gain supported by financials suggests there's a bid under the broader market, particularly for large-cap names. The key question is whether this buying broadens beyond banks into other sectors. If we see participation expand into exporters, industrials, and technology names, that would confirm a more sustainable rally rather than just a sector-specific rotation. For now, the technical picture looks constructive, and we may be breaking above some recent resistance levels that could attract additional institutional buying.
What about the impact on Japanese government bonds and yields in this environment?
Risk on sentiment in equities typically reduces safe haven demand for JGBs. When investors are buying stocks aggressively, they're rotating out of defensive positions, which puts upward pressure on yields. We'd expect to see yields drift modestly higher if this equity strength continues. The move also reflects improving economic expectations embedded in the market, which is a positive signal for Japan's growth outlook.
And on the currency side, how does this play into the yen?
The yen faces potential headwinds in this scenario. Improved equity market confidence and stronger risk sentiment generally encourage portfolio flows away from safe haven currencies like the yen. If this risk-on tone persists, we could see modest weakness in the yen, which would actually be supportive for Japanese exporters through favorable earnings translation. So there's a feedback loop here where yen weakness could further support equity upside for export-oriented names.
Staying with the broader market theme, the Nikkei posting its best weekly performance since 2024 is clearly the headline story. What's driving this surge in investor confidence?
That's the critical question for sustainability. We're seeing renewed confidence in Japanese equities after a period of relative underperformance. This could reflect several factors: potential recovery in domestic demand, positive sentiment around Japanese corporate earnings, or broader stabilization in global risk appetite that's favoring equity markets generally. Japan may also be benefiting from improved sentiment relative to other developed markets, where growth concerns have been more pronounced.
Is this rally primarily technical and sentiment-driven, or do you see fundamental support?
That's exactly what investors need to monitor closely. The strength of this rally's sustainability depends on whether we're seeing genuine fundamental improvements in Japanese corporate earnings and economic conditions, or whether this is more of a technical bounce and sentiment shift. We're heading into earnings season, so guidance from major corporations will be crucial. Bank of Japan communications will also be important, particularly any signals around monetary policy adjustments. Those will help us determine if this is a durable trend or a shorter-term technical move.
Shifting to the regional context, Asian stocks broadly were mostly higher, and we saw oil gains ahead of planned US-Iran ceasefire talks. How does that geopolitical development factor into the Japan picture?
This is quite relevant for Japan given its energy import dependency. Japan relies on Middle Eastern oil for approximately 90% of its crude oil needs, so any geopolitical tension in that region directly impacts energy costs and Japan's trade balance. The prospect of US-Iran ceasefire negotiations reduces upside risk to energy prices, which has been a persistent headwind for Japanese manufacturers and energy-intensive sectors.
So de-escalation in the Middle East is fundamentally positive for Japan's economic outlook?
Absolutely. Lower or more stable oil prices reduce input costs for manufacturers, improve margins for energy-intensive industries, and help contain Japan's trade deficit. On top of that, improved global risk sentiment from geopolitical de-escalation supports cyclical Japanese exporters. We'd expect sectors like autos, electronics, and machinery to benefit both from lower energy costs and from improved global demand conditions.
What's the market implication across asset classes in Japan from this geopolitical development?
For equities, the Nikkei 225 and TOPIX should be supported in the near term. Export-oriented sectors that have faced margin pressure from elevated oil prices stand to benefit most. We'd expect cyclical stocks to outperform defensive names in this environment. On the currency side, improved global risk appetite typically reduces demand for the yen as a safe haven, so we'd expect modest yen weakness, which again supports exporters. For JGB yields, there's potential upward pressure as investors rotate out of safe haven bonds into equities, though the impact may be somewhat limited given the Bank of Japan's current yield curve control framework.
It sounds like multiple tailwinds are aligning for Japanese equities at the moment.
The setup is constructive, yes. You have domestic strength in financials, improved global risk sentiment from geopolitical de-escalation, and potential energy cost relief for key export sectors. The challenge for investors is assessing how much of this is already priced in after the best weekly performance since 2024. Valuations have improved, so the question becomes whether earnings delivery and economic data can support further upside from here.
For global investors monitoring their Japan exposure, what are the key things to watch in the coming sessions?
First, watch for breadth in the equity rally. If buying remains concentrated in financials, that's less compelling than if we see broad participation across sectors. Second, monitor any Bank of Japan communications, particularly around yield curve control policy or any hints about the monetary policy trajectory. Third, keep an eye on corporate earnings guidance as we move through reporting season, that will validate or challenge the current optimism. And finally, watch the yen, especially USD, JPY levels, as currency moves will have significant implications for exporter earnings and overall market sentiment.
Before we wrap, any final thoughts on positioning heading into the new trading week?
The momentum is positive, and the macro backdrop has improved with geopolitical de-escalation and domestic strength in financials. But investors should remain disciplined about valuations and watch for confirmation from fundamentals. Japan has had false starts before, so sustainability of this rally will depend on earnings delivery and policy clarity. For now, the risk-reward looks favorable for those with conviction on Japan's recovery trajectory.
Excellent perspective. That wraps up today's briefing on Japan markets. If you're a global investor tracking Japanese equities, currency, or rates, consider subscribing to TOITOI Japan Market Radio for daily updates. Thanks for joining us, and we'll see you next time.
Thank you.